If you ever wanted to invest in gold but you thought that it was too expensive or just complicated, well, you're not alone. But here's the truth. You don't need thousands of dollars to start investing in gold because there are smarter and more affordable ways to get exposure to gold without breaking the bank. So in this video, I'll show you exactly how you can start doing that with just as little as a few dollars. So hit the subscribe button to give me a little boost before diving into the video. Now, first of all, why invest in gold? Simple. Same reason why you need money at all. Because without money, life gets expensive. Thanks to inflation, the price of everything keeps going up. What was once a $1 coffee is now $5. And at this rate, in few years, we might need a loan to buy a burger. The point is, your money today would not have the same value tomorrow. And that's why people invest, to make sure their money actually grows instead of shrinking like a cheap t-shirt after one wash. And guess what? Gold has been a solid investment. I think it's not a news. On an average, gold prices have gone up by 8 to 10% per year over the long term. But let's be real, it doesn't go up in a straight line. Some years, gold skyrockets like a meme stock. Last year, it went up by 27%, and other years, it flops harder than my attempt at meal prepping. Like in 2013, it dropped by same percentage. But in the long run, the trend is upward. Now, how to buy gold? Now, the classic way to invest in gold is walk into a store like Costco, pick up a gold bar, and check out like you're buying a giant pack of toilet paper. Now, there's one thing here. The stores will charge you an extra markup fee on top of the spot price. Spot price means the actual current market price of gold before any extra fees. Think of it like this. If gold were a concert ticket, the spot price is what you see as the base fee before the checkout. But in reality, most of us buy tickets from third-party sellers like Ticketmaster, and they have tons of other fees like platform fees, service fees, etc. Now, Costco is one of the better places to buy physical gold because their markup is only about 2% over the spot price. So if today gold price is $2,853 per ounce, you're probably gonna pay around $3,000 after Costco takes the cut. But I think it's still a lot better than buying from a jewelry store because their markup can be 10 to 30% thanks to design and brand value. Alright, now we know that how much it costs and where to get it from. But, and there's always a but. Here we have two big problems. First of all, it's expensive. Not everyone have $3,000 lying around just for gold. If you're early in your career and still trying to pay rent, clear student loans, or build an emergency fund, this isn't exactly an affordable entry point. It's like saying, hey, just buy a mansion instead of renting an apartment. So heavy upfront cost becomes a huge barrier, especially for beginners who just want to dip their toes into investing in gold without committing to thousands of dollars upfront. Secondly, there is issue of storage. You buy gold, but then what? Are you gonna just toss it in your drawer and forget about it? You need to keep it somewhere secure. So what are you gonna do? Are you gonna keep it under your bed, bury it in the backyard like a pirate? Or the safer options like rent a safe deposit box from a bank or a private vault or a specialized storage service? All of these would come with additional cost. And if you decide to keep it to yourself, let's be honest, some of us can't even keep track of our AirPods, our wallets, our keys. We forget our passwords all the time, and every time we do laundry, one of our socks just disappears. So do we really trust ourselves with literal bar of gold? I mean, there's a reason why a lot of us carry credit card debt, and if you're one of them, don't even think about keeping gold bars safe with you. You might accidentally sell it for some new sneakers. So how do you get past all of these hurdles and start investing in gold without the hassle? That's where gold funds or ETFs come in. Gold funds or ETFs function just like any other investment funds, but instead of investing in stocks, they focus entirely on gold. If you have ever heard of mutual funds, index funds, or ETFs, the concept is pretty similar. And if you haven't heard about any of them, you need to watch more of my videos. So let's break it down. When you invest in a stock mutual fund or ETF, your money is pulled together with other investors' money and it's used to buy shares in multiple companies. For example, when you're investing in an S&P 500 index fund or ETF, your money is being invested in top 500 companies in the US. This means your investment is spread across different stocks, reducing risk while giving you exposure to the stock market. Now imagine the same idea, but instead of buying stocks, the gold funds or ETFs invest in, you guessed it right, gold. So instead of physically owning and storing gold yourself, these funds own the gold on your behalf and you own shares of the fund, which is backed by real gold. In other words, you're still investing in gold, but without the headaches of storing, securing, or even buying the entire gold bar upfront. Talking about that, the first advantage of investing in gold ETF is effortless storage and easy liquidity. When you invest in gold ETFs, your money is directed to asset management companies that purchase and store gold on your behalf. So instead of dealing with hassles of physically handling, safeguarding gold bars, these companies take care of everything, keeping the gold securely in their vaults or a safe deposit boxes. As an investor, you don't actually hold the gold, you hold the proof of ownership, which is reflected in your investment account every time you buy the shares of these ETFs. And when it's time to sell, you don't even have to go out searching for a buyer or negotiate prices. You can just simply sell your gold ETF units online through your brokerage app or your website, just like you would do with any other stocks or ETFs. And the best part is you can trade them anytime during the market hours, which is 9:30 to 4 p.m., without ever leaving your house. Another major advantage of investing in gold ETF is the price. Unlike buying physical gold where you have to pay a markup over the spot price, gold ETFs eliminate that extra cost. Instead of retailer adding a premium like Costco's 2% markup, ETFs only charge you a management fees, also known as expense ratio, which is typically ranging between 0.4% to 0.6%. This is the small fees you pay to the asset management companies for handling all the storage, security, and logistics of your gold investment. But more importantly, I think it's the price you pay for the ability to buy gold for as little as $5. Yes, that's right. And here's how you can do it. Every ETF has a share price, just like any stock. One of the most well-known gold ETF, SPDR Gold Trust or GLD, currently has a share price of $262.50. So when you buy one full share of GLD, it's equivalent to owning about 2.6 grams of gold without ever having to touch, store, or worry about losing it. But here's where it gets even better. You don't even need to buy a full share. Many brokerage platforms allow you to buy fractional shares, meaning you can start investing in gold with as little as $5 or $10. Sure, that might only get you a speck of gold, maybe enough to coat a grain of rice, but over time it adds up. This affordability also enables you to invest consistently instead of saving up for months just to afford a full ounce of gold. And what if you were able to save that much amount in maybe few months to buy a full ounce of gold, but now the prices have gone up and you can't even buy it now? See what I'm saying? And there's more. By investing in small amounts regularly, you reduce the risk of market fluctuations. It's a strategy called dollar cost averaging. Now, here's why dollar cost averaging matters. Let's say gold was trading at $2,000 per ounce in August 2020, and you dumped all your money into gold at that price. Now it's October 2022, and you need that money for, I don't know, something. Now, you would have been in a painful loss by October 2022 when the gold prices dipped. But if you had been investing small amounts consistently, you would have been buying during the dips too, averaging out the cost over time. That's the power of dollar cost averaging. Your risk is lower and your losses are minimized. So instead of stressing over whether gold prices will rise or fall, you just keep investing steadily, knowing that over time you're getting the best possible average price. It's like buying snacks. You don't wait for a perfect moment just to buy cheap. You just get them whenever you need them. Gold investing with ETFs works the same way. Small, consistent buys lead to big results over time. Now let's talk about the most underrated, probably the biggest advantage of investing in gold through these ETFs, which are taxes. Since gold ETFs are traded like stocks and other digital assets, you can hold them in the tax advantaged accounts like TFSA, RRSP, or FHSA if you're in Canada. And for people in the US, you can invest in Roth IRA and 401k. That's where things get really interesting because depending on where you hold them, you can legally reduce or even eliminate taxes on your profits. Now here's how it works. If you invest in a gold ETF through a TFSA, which is tax-free savings account, any profits you make from selling your gold ETF are completely tax-free. That means if the gold prices skyrocket and you sell for a big gain, the government would not take a single cent from you because there is no capital gains tax in TFSA, so it's all yours. And if you invest through your RRSP, the tax treatment is a little bit different. You might pay taxes when you withdraw your money in retirement, but here's the catch. You will be in a lower tax bracket by then, which means you're going to pay a lot lesser tax than you would today. Plus, the money you contribute to your RRSP is tax deductible, which means that portion of your income which is going towards investing in the gold is not taxed at all. It's like getting a tax refund just for investing, and it's ideal for someone who is in a higher tax bracket right now and they would like to reduce their taxable income. And if you invest in a gold ETF through FHSA, you get the best of both worlds. Your contributions are tax deductible just like RRSP, but when you sell or withdraw your money to buy your first home, you don't pay any taxes on your gains, just like a TFSA. It's literally a tax loophole that lets you build wealth completely tax-free while saving for your dream home. For those in the US, the same tax benefits apply if you hold gold ETFs in a Roth IRA or 401k. Your capital gains can be tax-free or tax-deferred depending on the account type. Now, which gold ETF should you pick? Now that you know the tax advantage accounts, let's talk about which gold ETF to buy. I already mentioned about the SPDR Gold Trust, probably the most popular gold ETF out there. There's another solid option, iShares Gold Trust, also known as IAU. You can easily find these on your brokerage app and you can start investing with as little as $5 or $10. And for people like me in Canada who want to avoid currency conversion fees, you might want to consider options like Sprott Physical Gold Trust, also known as PHYS. GLD and PHYS have similar management fees. I think it's 0.4%, which means for every $1,000 invested, the fees will be $4 per year, which is actually a lot cheaper considering a lot of mutual funds and ETF cost way more than that. IAU, however, has an expense ratio of just 0.25%, making it even cheaper than GLD and PHYS. If I lived in the US, I would probably go with IAU since it's cheaper and it has been around almost as long as GLD. But you can't go wrong with either one, to be honest. Since I'm in Canada, I would stick with PHYS to avoid extra forex charges. Now the question is, does the ETF you pick really matter? At the end of the day, all these gold ETFs hold physical gold, so the differences are minimal. Yes, IAU has slightly outperformed GLD over the long term due to the lower management fees, but the difference is tiny. The real key to success in investing is not obsessing over small differences, it's consistency, whether you are investing in gold, stocks, your business, your health, or your skills. The only thing that truly pays off big time is sticking with it over the long run. So it doesn't matter which ETF you pick, stay consistent and stick with it for a long time. And speaking of investing, if you want to learn top 3 passive income strategies to hit $100,000 goal in 2025, watch this video and I'll see you there.